What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leverage Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit the subscribe button to make sure you don't miss any of our videos. We do post videos every night throughout the week, except for Fridays, and then once on the weekend as well. Let's look at the agenda for today. We'll just do a recap of today's intraday price action. Then we'll zoom out a little bit to look at the week, the month, the quarter, and the year real quick. And then we'll get into our 4-hour markers and the triggers and targets for the day, as well as a quick review of the triggers and targets for the week, month, quarter, and year. So let's look at the charts. Intraday price action. You can see we opened up here 27.16. With the push up, we hit this 15-minute broadening formation that we had from the previous day, and we got the rejection there, bringing us back to opening print, and then finally through opening print, finding support at our overnight low, right? So at this point, I believe we had made a lower low on the 5-minute. Yeah, we had made a lower low on the 5-minute as well as the 15-minute, but we're keeping our eye on the 5-minute first, just to see if we can see anything that might spark a domino effect on the 15 and up to the hour, possibly in 4 hour, but at least starting with the 15, right? So we get the or with the 5-minute, so we get the lower high here at opening print, and we went ahead and entered calls here once we got the 2 down, which locked in this lower high. We got the push down to overnight low, so again we have our 4 hour markers that are coming into play here: the opening print, the overnight low, overnight high, previous high a day, overnight high, and previous low a day. So we got previous low a day, overnight low, opening print, previous high a day, and overnight high. Those are when we're talking about a scalping or day trading, intraday trading perspective, those are the levels we want to be concerned with. Whether or not we get outside the extremes of those markers, then we start looking at the notes that we have for the 4 hour, 1 day, and week triggers and targets. But from an intraday perspective, we're just looking at these levels to try and get good entries and exits. So once we get to the overnight low, we want to stay in the trade, right? Because that's our first target, but it doesn't offer us a lot of profit. We want to look for that second target here, which is previous low a day. Now, it could have been reversed. This could have been the previous low a day, and this could have been overnight low. It doesn't matter. Just whichever ones comes first is the first target. So we're looking at puts below opening print, calls above opening print. So if we were looking at calls, the first target would be previous high a day. The second target would be overnight high. So in this case, first target was overnight low. We got that. We weren't being greedy or anything. We're just looking at the charts. You can even go down to the 1 minute here. It's way back in the morning. But you can see on the 1 minute, you're still getting lower highs, right? So that gives you more confidence to stay in the play. And once we get to that overnight low, you want to go to that 1 minute anyway, so we can get the best exit that we can get. So we're just looking for any higher lows on the 1 minute, looking to exit as soon as that higher low is locked in by a 2 up, right? So we got the low here, then a higher low. Once this candle went 2 up, or once price went above the high of this candle, that locks this candle in as the as the higher low, and we go ahead and exit at this point. So we entered up here around opening print. I think it was like 27.13 or 27.12. So we got 27.13 to 26.68. Not a bad move. Now, we only exited half our position. We did end up keeping some as a hedge for the day. We do have calls that we've been swinging for October as well as January 26. It's January 27 as well, but we're not really worried about that from a day-to-day perspective hedge at this point, unless we're to enter some type of further downtrend, especially from like a week perspective. But since we just put in a higher low on the week, at worst, we're just consolidating, if not just in a slow uptrend. So we're not too worried about the January 27 calls right now. Those are in good position anyway. So we're just looking to protect against mostly the October calls. Again, even the January 26s aren't that big of a deal right now. We're in good enough position with those, buying at the April lows, that we don't really have to worry too much about those. But just as a hedge, we kept the second half or half of the put position that we got in If you go zoom back out to like the 15, it was just a choppy day, really. There was a combination of higher lows and lower highs, and then higher highs and lower lows. So you can see here, if we zoom in just intraday, after we got the big drop, if you look here, we got what appeared to be a higher low here. Or first, a higher low. So you could have entered calls, but again, they were stopped dead in their tracks at the opening print, basically. A little bit of a wick through, but rejection at opening print, back to overnight low, a little bit below overnight low, then back up to opening print, then back to overnight low. So just a choppy day. So it wasn't much to do. We held on to them. We did exit towards the end of the day once we knew that we didn't want to hold them overnight. And it was close to the end of the day. We went ahead and exited before. Luckily, it was before this big push up. We don't like to hold too late into the day anyway. There's a bigger chance of a squeeze at the end of the day if you're not breaking down already, or even if you have broke down, there's a chance of people trying to buy the dip. So we don't like to stay on the contracts through the end of up to the end of the day. Last minute to sell. So we got rid of those luckily before the push up, and still made a little bit of profit. Right? It was because we still bought up here at the opening print, and we sold down here around overnight low. So not a bad day, not a big day. We like trending days a lot better. Obviously, you got a lot more opportunity to make easier money, right? You don't have to work as much. You don't have to watch the charts and be looking for, okay, are we making lower highs below opening print, higher low, just chopping around opening print. It made for a little bit more of a work. You got to pay attention to the charts, but there's always time for trending days. So made decent amount of profit. If you look at the internals, just real quick, it basically tells the same story. We've got SOXL's price action up here on the left, tick Q up here, which is basically the measure of QQQ's breadth, 80QD, which is another measure of QQQ's breadth, and then vol QD here in the bottom left, which is basically money flow going in versus going out. So you can see from money coming in versus going out perspective, there's money going in all day. It wasn't at a breakneck pace. It was a slow buildup of money pouring in or going in, but the breadth was below zero line for a lot of the day, right? And then once it was up around zero line, it was just playing with the zero line. So you can see that the internals basically play out as the day did. So again, you don't want to make your trades based off the internals, but it's just another tool in your tool chest that you can use with other evidence on the charts to know where price action has a good chance of going in the day. So there's our intraday price action. Let's go ahead and zoom out just a little bit. Look at the 1 day. Let's pull out here to the 1 day, and you can see we've got the market makers expected move high up here at 28.64, the low down here at 24.38, which is the same as the flip for the quarter. That would flip the quarter red if we went below there. The month flip 24.08 just below there. So we don't want to get back down there again. If we do, we want to get the bounce just as we've been getting for the last 11 weeks, right? But if we do get below that level, that flips the month and the quarter red. We're already red on the year. So that puts us in full time frame continuity to the downside, which gives bears the momentum. So if you're a bull, that's not what you want. If you're a bear, hey, that's what we're looking for. And if you're just somebody looking to make money either way, it doesn't matter. So we're just going to look at this and try and determine where our entries and exits will be for the upside and downside. That way, whichever side triggers, we're in for it. But we did get a failed 2 down. Basically, it was kind of a doji hammer, but it was a failed 2 down because price action did go below yesterday's price action, so that makes it a 2 down. And it was failed because it's not a red candle anymore. It's green, so we've closed above where price opened. Now, if you're not familiar with these broadening formations and the numbering of these candles, it's our trading and charting method is based in what's called the strat. If you're not familiar with this, there's plenty of information on the internet. There's also links in the description to this video to some information about the strat, but it's a very simple way to look at price action. Candle can only be one of 3 things, a 1, a 2, or a 3, and based off of combinations of those candles, there's basically 6 main reversals, and they give you a very clear entry, very clear exit, and that's why we like to use that as the base of our trading method. The strat is not new; it's been around for years. It's proven. It's can be used on any chart other than SOXL as well. So you can use it on whatever chart you want. But it's basically, in my opinion, the easiest way to understand price action. So there is a big strat community out there. Do your research if you want more information on it. I do suggest it to everyone. I think it's the easiest way to look at trading. This chart is a little bit busy just because we've got a couple of major levels on there, but when we're really looking at it from a strat perspective and in like a daily perspective, this is what we're looking at, right? Very few lines on the chart, not a lot of, not EMAs and MACDs and stuff like that. We keep RSI somewhat in mind, but we don't trade based off of it. We have a couple of downtrend lines, right? These larger dash lines are downtrend lines. But aside from that, just a couple major levels and a couple broadening formations. Look at it from like the month perspective, right? So you just get a real basic understanding of where price is, how price is moving, and where you're at in price at that time. So a good chance these broadening formations as well, they're good indicators of where price action will go, either to the downside or upside. So you can better chart out your entries and exits. But anyways, I'm getting away from what we're really here for, the charts here, the triggers and targets for tomorrow and whatnot. So just looking back at it, it was a failed 2 down. So it's a little bit more bullish than bearish, but it's not the most bullish signal, right? So we would have looked for a 2 up and a gap fill or something for a much more bullish signal. But what is bullish about it is this wick down here shows that there was attempt to get price action below, but it was not accepted and we pushed back above. So again, we're still in this 11-week price range between 24 and 28, right? We're buying calls up here, we're buying puts up here, selling calls up here, and just riding those, giving us some time on our contracts, and then every day in between, just doing some intraday trading. So we're still looking for this gap close, retest of the year flip at this 28.13, which has been the top of the range again for this 11 weeks sideways action. Hopefully we get push up above it. If not, we'll look for the reversal signal and start buying puts and selling calls. So that's where we've got at from a day perspective. From the week, I kind of touched on this a little bit earlier. We did get technically a higher low on the week. It's kind of like an equal low, but it's a higher low. Only problem is it's following a lower high, so it doesn't necessarily indicate an uptrend. Because we have the lower high, it's giving us more of a consolidation pattern, right? So we're just looking for it to continue to consolidate to the point where it's done and finally get a break to the upside or downside, right? So we've got our triggers and targets out there ready for those. From the month, we're still doing decent. It's an inside month, but it is green and to the upside, right? So we're looking to pop above last month's price action. That would be a kind of a bullish indicator that would get us above this year flip full time frame continuity to the upside if we do get above that year flip. So the week, the month, the quarter, and the year will be green. That gives the bulls momentum. We've got gaps up here. We've got higher highs that we can try and maintain. So from a month perspective, we're still looking good. The quarter is still looking pretty good as well. It's still in force with the 2 down, 2 up. It's in force because current price action is above the high of last month's price action. So with that 2 down, 2 up triggered, the target is the high of the candle to the left of the 2, which is at 36.15. So we're looking to continue to push up throughout the quarter. And again, it doesn't have to happen in one quarter. You don't have to reach magnitude of the flip. It may take 2 or even 3 quarters, but that is the ultimate target from a quarter perspective. The year is the only thing that's kind of throwing us off. And again, that's evident by the time frame continuity indicators, as the year is red while everything else is green. From a strat perspective, we got the 1, 2 up, 2 down that triggered. The magnitude of that was 621. We almost got there in April. We got to that 723. But again, the year remains red. I'm not saying we're going to continue. We're going to go back and fill out this strat to the 621. I think that push down is pretty much over. But could we get a further push down a little bit? Yeah, we got the gap here on the day perspective. We got some gaps down here on the day and down here as well. I don't know if we'll get down this far, but there's a high probability that we could fill this gap right here before some other bounce up like that. Or if we fill that, we could just continue going down. We'll just have to continue to play it how it goes. But that's how it looks from a high time frame perspective. Hopefully I didn't go through it too quick. Hopefully I didn't go through too slow. And hopefully everyone agrees. If you're not, let me know in the comments. If you do agree, give it a like, a thumbs up. Helps the channel grow. Anyways, let's go ahead and look at the triggers and targets. Let's go back to the scalp perspective for tomorrow. If we're looking at so once again we're looking at here's our previous high a day up here. Overnight high is up here in the gap. The week flip we want to keep in mind, that's where we flip the week red, is here at this 26.95. The 4-hour trigger to the downside here is 26.88. 4-hour trigger to the upside is 27.21, and the previous low day. So we just want to keep those all in mind. And then again, it's just based off of where we open up. Say we open up here at the bottom of the gap. Oops. Let's get the right tool out here. Say we open at the bottom of the gap here. We're looking for any higher lows above opening print, and we're targeting overnight high. Now, because opening print is above previous high day, the only scalp target that we would have here, immediate scalp target, would be the overnight high. We wouldn't have like previous high day up here further, but we do have this gap that we're working with, so we would look to close the gap as our next target, and then we could look at our day and our 4-hour and our day targets to the upside as well and see how those play in. But again, if we do open up here and we get price action down here, and then we get the lower high here, then we're looking to enter puts when this lower high is locked in, and we're looking at the 4-hour trigger to the upside first, the week flip, and the 4-hour trigger to the downside as your next targets. Your overnight low is up in there as well, and then your previous low a day, right? So if things get real bad, we do have this 15-minute broadening formations right here, this 1-hour downtrend right here, which we closed above, but we haven't exactly cleared, right? A higher low and the further push up would kind of clear us of that, but for right now we're still running the chance that we could open up tomorrow. Maybe we even open up and down here and push down. So we do got to keep that in mind. Oops, let's go ahead and get rid of this. Oops, come on now. So yeah, we do have that. We also have this 4-hour daily downtrend line right here, kind of lining up with the previous high day. So if we do open up down here, do we push only to previous high day, maybe wick up and reject off of the gap again? Who knows? Again, if you're familiar with this channel, it's nothing new to you, but let's just go ahead and look at like the 4-hour gaps are magnets to be closed, but they can also be bounce or rejection points as well. You can see how this was a rejection point already once, twice essentially. You can see how we bounced off of this gap here as well. So you do look for gaps to get filled, but it does take a little bit of work to get in them. There was a reason why there was no trading in these zones. You've got to get the trade back action in those zones to fill those. So you can again reject off of those, bounce off of those, but that's how we're looking at it. Let's go back in here, swing, and look at from a 4-hour perspective. We've got our previous high a day here and previous low a day here. The 4-hour trigger to the upside is if we get price action above the second 4-hour candle of today, and the 4-hour trigger to the downside is if we get price action below the low of this second 4-hour candle of today, right? So if we get just speaking from a strat perspective, if we get price action below the 1, that's a 3-1-2 down reversal, entering here at the low of the 1, looking at your first target as being the low of of today. So from there to there is your entry and exit, and from a scalp perspective, that's not too bad. That's what's this low, 26.88 to 26.57. It's all right. Maybe a 1% move. It's like 30. What did I say? 30. Yeah, 30-cent move. Yeah, that's like a 1% move on the underlying ETF. So it would be an okay move, but of course that you'd be looking for a little bit more. If you do that, we look on the 1 hour. On the 1 day, and we would see that would trigger a strat reversal to the downside, and we'll go over that trigger and target there when we get there. But from a 4-hour perspective, we know the trigger here is the low of the second 4-hour candle of today. The trigger to the upside is if price action goes above the high of the second 4-hour candle of today, and we're targeting the high of the 3, so 312 up. So a little less than a 1% move there, so not quite as much worth your while. But again, that would just be your initial target. Here you'd be dealing with your gap again, so you'd be looking for at least the half gap fill. If you're familiar with this channel, there's plenty of examples of the half gap that we've looked at. So I don't have one readily available right here, but a lot of times you'll only fill half of the gap before rejecting, at least initially, right? Before you get a full gap fill. So we will look for half gap, then full gap fill, and then again, the year flip has been a rejection point multiple times throughout the last 11 weeks. So that can be kind of like an extended target for you from a 4-hour perspective. All right, so if we go ahead and look at our notes here, we've got this mapped out. So, this is Wednesday. All right, September 10th. There will be 76 trading days left in the year tomorrow, and today closed at 27.18. Yeah, 27.18 is where we closed. We know what the week, month, quarter, and year flip at. So we know that we're green on all these. They flip red at these levels, and the year flips green at this level. We know the market maker's expected move for the week is $2.19. If you're not familiar with this, check out our weekend video, and that goes a little bit deeper into the market maker's expected move and how we get that, and how putting it on the chart. But that gives us a range. The market maker's expected that 70% of price action will be between 28.64 and 24.36. Oops. If we just go back out to the chart here, we can see market makers expected move high and low here. We're basically in the middle of it, a little bit high in the upper half, but not at the extremes by any means. So we should still be seeing some pretty free price action based off of that. So again, we've already looked at it at the chart, but just looking at our notes, we can see on the 4-hour, if we get the 312 down, that triggers at 26.88, magnitude 26.57, and we've got our extended targets of 26.11, which is last month's 50%, and 25.85, which is last quarter's high. To the upside, we would have the 312 up, triggering at 27.21, magnitude of 27.37, with extended targets of 27.43 and 27.70. Okay, so we've already gone over those on the charts. Let's look at it from the day perspective. If those 4-hour triggers meet their magnitude, what does it trigger from the day perspective? So from the looking at the downside, you would have a 2 up combo 2 down, right? So it already triggered the 2 up 2 down, but the magnitude of that move is the low of the 2 to the left of this 2 up. So once price goes below this 2, the magnitude for the move should be the low of this 2, and we did not reach that yet. So that would be a 2 up combo 2 down, because this 2 down plus if tomorrow is a 2 down would be a combo 2. It'd make just one big 2, basically 2 down. We do have to deal with that 26.11, 25.84 that I talked about in the notes. That's last month's 50%, last quarter's high. You can see how those have been points of either resistance or support in the past, right? Here, they've wicked through here, right? But that just shows that it's support there. Here. So those are levels we do need to deal with. But ultimately, we want to reach the low of this too, right? And then from there, we can have the extended target of last week's 50%, and then we've got some other markers to the downside. Looking to the upside, we would have the 2 down, 2 up if this triggers, right? So if price action goes above today's high a day, then that would trigger the 2 down, 2 up. Again, the magnitude is not very, very big there, but you're looking for more than just the magnitude, because the magnitude is just the high of this too. So 27.43. So triggers at 26.57. I'm sorry, 27.37, and magnitude of 27.43. So 6 cents is the magnitude, but you'd be looking for the actual gap fill with that move, and then pressing up the weak flip. So your initial target would be there just by the rule of the strat, but you would be looking for the gap fill. So just looking at our notes, just from a numbers perspective, instead of looking at the chart, again, if we go to the downside, is a 2 up combo 2 down, triggering at 26.57. We've got those targets of 26.11, which is last month's 50%, and 25.84, which is last quarter's high. before reaching a magnitude of 2560, right? And to the upside, we have the 2 down, 2 up, triggering at 2737, magnitude of 2753, 43. But again, you're looking for the gap close there. So the 2796 is your extended target. 2813 again is the flip for the year. And then we've got the 2864, 2911 extended targets as well. All right, so I hope everybody is familiar or comfortable with that. If you have any questions, let me know in the comments, but you can see we're in this range here, 28 to 24. We're almost back there. This gap close will put us back up there, and then hopefully we could do something again, maybe press this market maker's expected move high, which would press us up against the lower high line, right? Because it's not a downtrend line yet because we didn't create a lower low, but this high from the week perspective is obviously lower than this high. So there is a lower high line that we have, and it's not funny that it coincides with the market maker's expected move high, right? There's reasons from even a horizontal perspective that that would be where an expected reversal would be, right? But if we do, are able to press through that, then we're looking at pressing last month's high and then getting up to this daily and weekly broadening formation. So we know what we're looking for from an intraday, scalp and day trade perspective. We're looking at what we've been looking at from a swing perspective, from a day and week perspective. We've already looked at the month and quarter and whatever year charts, but we won't go over those. We'll just go over the triggers and targets again. We have not triggered anything on the month. Well, looking at the week, we have triggered the failed 2 down, 2 up. We're still in force. That's why this is bold and underlined. It's underlined when it triggers, and then it's bold when it's in force, because we are above this 2697. So we are looking for 2911 for this move, right? So we're still looking for that, and until we're no longer in force, we're still looking for that. And even when we're in force, until we pull like a red 3 or a bearish engulfing candle, we're still looking for that 2911. And again, it doesn't have to happen in 1 week. It could take multiple weeks to get there, but before we see a real significant pullback, we do want to see the 2911. From a month perspective, nothing has triggered to the upside or downside. We're still an inside month. The quarter, again, is triggered and is in force, so it's above 2584, and it's a 2 down, 2 up, so we're looking for that 3615. It'd be nice to make it this quarter, but I don't know that we would make it there this quarter. It might, take, some type of Santa Claus rally or something like that to get there, maybe even the beginning of the year push that we usually get to get up to that level. But that has triggered, and it is in force. The year, again, is the only thing that's kind of tripping us up. Again, this is underlined because it has triggered, but it's not bold because it's no longer in force. So we did go below that 2350. We didn't quite reach the 627. We reached that 723. So still there was another dollar in that move, but I don't know that move's really on the table anymore, especially if these continue to stay sideways to up, and if our time frame continuity continues to stay green for the most part, right? Especially if we can flip the year green, then I definitely don't see us going back down and fulfilling this magnitude, right? So there it is, your triggers and targets. I hope everybody is okay with those and understands what's going on. If you do, give it a thumbs up. If you like this video, give it a thumbs up. I tried not to make it too long, but still, kind of cram in as much information as possible. If you have any questions about any of the information I provided, please leave it in the comments. I'll be happy to answer it for you. If you disagree with any of my analysis, let me know. I'm open to criticism. I don't want to get blindsided by something too. Hey, if I'm really missing something on the chart, I'd like to know. So constructive criticism is always cool. Don't come at people crazy, but I'm always up for a different opinion. So again, if you like this, give it a thumbs up. Get some good rest tonight. Take this strategy and then the layers of the 4-hour markers that I've provided as well, and take that to another chart as well. Keep SOXL on the table, right? Continue to trade it because it's an easy money maker every day. It's got a high beta. Depending on where you look, it's the beta is 4 to 5 on the underlying ETF. So you're going to get that daily movement. Today was kind of a dud day. You get those every now and again, but you're usually going to get a movement every day. And then with the low premiums that you're getting for how high the delta to theta ratio is, it's a recipe for a winner. But you can take this same strategy and use it on any other chart. So this channel is just focused on SOXL. But that's what it is. You can take it to other things if you'd like as well. But give us a thumbs up. Make sure you subscribe. That way you don't miss our videos. And yeah, get some good rest tonight. Wake up refreshed tomorrow. Wish everybody good luck, and we'll see you out there.